All right, hello and welcome everybody to the weekly market forecast for Monday, August 7th, 2017. This webinar is brought to you by OctaFX, the award-winning Forex broker, offering you some of the lowest spreads in the industry. So guys, without further ado, let's jump right into today's presentation. A couple of quick disclaimers. Risk disclaimer: trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You shouldn't invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer: the information in this webinar is provided as general market commentary and does not constitute investment advice. In other words, we're not giving away specific trade recommendations. It's just purely an educational webinar. It's a technical presentation today. We're looking at charts mostly, but it's always important to know what's going on in the news and with the big fundamental stories. So let's run through the economic highlights of this week quickly. Wednesday, we have the Reserve Bank of New Zealand official cash rate and their statement. So look for some volatility in the New Zealand dollar on Wednesday. It's 10 p.m. GMT. Thursday morning at 9:30 GMT, we have UK manufacturing, so which could potentially move cable. That's the pound against the dollar and the other pound denominated pairs. Later on that day, we have the producer price index, the US figure, and the weekly jobless claims figure. Now they're both figures that relate to the US dollar. And on Friday, 1:30 p.m. GMT, we have the consumer price index, now the US figure, and this is an important figure because it tells economists kind of what's going on in terms of inflation and deflation, which are very important signals for the central banks as to the health of the economy. So those are the highlights this week. It's a quieter week than last week, not a big week for fundamental data. Moving on, let's talk about quickly what we're going to cover today and what we usually cover in these strategy webinars. We're going to look at key support and resistance levels. We're going to look at recent and emerging chart patterns. We're going to look at a variety of technical indicators. And we look at trading strategies. And as with every week, we've got a fresh trading strategy to cover this week. So moving on, let's take a look at the strategy of the day. Today we're going to look at a scalping strategy, which refers to a shorter term strategy catering more to the day traders that like to be in and out of the market a lot, putting on a lot of trades throughout the day. And this scalping strategy uses the stochastic oscillator and the 200 period exponential moving average, 200 period EMA. That differs from a simple moving average just in that it gives greater weight to the more recent periods. So, strategy of the day, what time frame? It's a short-term strategy, so we're actually looking at the 5-minute chart. You could trade this on a variety of pairs, but I think a good one to look at is the pound against the yen, very volatile pair. Technical indicators, as I said, we're just going to be using stochastics and the 200 period exponential moving average. Moving on, let's look at the specific rules for this trading strategy. First of all, the 200 period EMA acts as a filter, so you only take buy trades when price is above the 200 period EMA, sort of acting as the line in the sand. Dividing the bulls and the bears, so above it you're in bullish territory, and then the rule for this system is that you only take buy trades above the 200 period EMA. Conversely, you only take sell trades when price is below the 200 period EMA. And then your entry trigger is you buy when stochastics are below the 20 level and curving upwards. So if price is above the 200 period EMA and you have stochastics below 20 and curving upwards, then you have a buy signal. Conversely, when you sell when stochastics are above 80 and curving downwards, and price must be below the 200 period EMA in order to get that sell signal. Terms of profit taking and risk management. you're going to want to place your stop loss 10 pips from your entry price. Place your profit target 20 pips from your entry price. So you got a 2-to-1 risk to reward ratio. Usually want to have a greater potential reward than your risk. And finally, don't trade the strategy around the release of major economic news, because that can totally blow the fundamentals out of the water. So you always do want to be aware of what's going on in the news, and just to sit on the sidelines when there's a big figure coming out. An example of that would have been non-farm payrolls on Friday. Would have been better just to sit that one out and not trade the strategy around that. So there's our strategy for the day. Let's take a look at the charts and see how it works on the charts. I'll hop over here. Okay, so here we are in MetaTrader. We got the pound against the yen. We're on the 5-minute chart, and so here we are. I pulled this up for this morning to show buy and sell signals on the chart. So let's pull up the crosshairs. And so, for example, here we had price trading above the 200 EMA, and we had the stochastics curving upwards and crossing the 20 level. So we had our a buy signal here. Turned out to be a fairly good buy signal, it looks like. Conversely, back here we had a sell signal, price trading below the 200 period EMA, and we had stochastics crossing from curving downwards above the 80 and ultimately crossing beneath the 80, and a fairly good down movement on the heels of that signal. I pulled up one more. Again, here we're trading above the 200, so we're only looking for potential buy trades. Pull up the crosshairs, and what happened here, we had stochastics below 20 curving upwards, price above the 200, so we had a buy signal here, and it was good for at least 20 pips here. So there are some instances of how today's scalping strategy works in the market. Very simple strategy. Always recommend experimenting with these systems, trading them on a demo account, and also you can keep adding other filters also. So for example, you might look across, if you want to increase your odds of success, you might look at multiple time frames and only take buy trades when you're in bullish territory across different time frames beyond the 5 minutes. So you might be looking at the half hour, the hourly, the 4 hour, and look to be, for example, above the 200 period EMA across all of those time frames, and that's going to increase the probability of your buy signals being winners. So that's another example of another filter that you could add to the system in order to improve the profit rate of the system. So that's today's strategy, very simple one. I'm not a huge fan of super short-term strategies, but I wanted to introduce one. I know there's a lot of retail traders out there that like to be trading throughout the day and like to be in and out, and so that was an example of a short-term trading system or scalping strategy. What I'd like to do next quickly is to recap last week's strategy. I'm a big fan of the concepts behind the strategy that we talked about last week. I'm just going to pull it up. It's an MT4. So what we looked at last week was a sort of an arbitrage trading strategy that using correlations between different currencies. So what we were looking for was currencies that had a very high positive correlation, and we know that the Australian dollar against the Japanese yen and the New Zealand dollar against the Japanese yen have a very strong positive correlation. They trade in line over the past year. They traded in line 93% of the time. So the concept behind this strategy was to capitalize on the fact that we know that most of the time, the vast majority of the time, these two currency pairs trade in line, and so how can we capitalize on that and develop a profitable trading strategy from that knowledge? Well, something you can do is what I did was I pulled up the overlay custom indicator on here on MT4. To do that, you just go to Open Data folder, MQL4 indicators, and then you put your overlay custom indicator on there, and you can overlay charts on top of each other. So what we have right here is the New Zealand dollar and the Australian New Zealand dollar against the Japanese yen and the Australian dollar against the Japanese yen overlaid. So we know that these pairs trade in line 93% of the time, but what we're looking for is when they actually diverge and they're not trading in line as much as usual. So for example, here you can see they're trading almost exactly in line this period here, and then here for example they kind of diverged. Let's make it bigger again. So we're looking at this period here. So how do you trade that? If you want to take advantage of the knowledge that these two trade in line 93% of the time, and you can kind of expect statistically that they're going to converge again, what you could do in this instance is to buy the New Zealand dollar, which is here in green, against the Japanese yen. So you buy the New Zealand dollar against the yen. Here you sell the Australian dollar against the Japanese yen, and you wait for the two currency pairs to converge. So in this instance, we're looking at the hourly chart. You could trade this on across multiple time frames. But what we saw was the two pairs converging. You would have been profitable on your long New Zealand dollar against the Japanese yen, and you would have been profitable on your short Australian dollar against the Japanese yen. And as the two pairs came together, kind of as expected, based on the knowledge that they trade in line 93% of the time. Of course, you could be wrong on, you could potentially lose money on both sides if both trades could go against you, but the statistical probability is that they do come back and converge at some point. So that's an interesting strategy to experiment with. If you have any questions about the custom indicators, anything like that, do feel free to shoot me an email at webinar@OctaFX, and I'll be happy to get you more information. Okay, so that's enough for the strategies for today. Let's go over and look at some of the charts of the majors and so forth. Now hop back to MT5. Okay, let's take a look at what's going on in the euro. We can see that the euro has had a great run, definitely in bullish territory here, above the 200 period simple moving average. It's broken through major resistance here, and it's just taken a bit of a pause here, and it's pulling back a little bit over the last couple of days. We know that we have support to the downside here, looking back at this level here. We have further support to the downside here, and it's kind of instructive to look at these trend lines here also. Here was another strategy that I brought up in another session, where as a way to kind of help you get into trades using trend lines. When you have a nice instance of a trend line here, you can look for confirmation from stochastics as an entry. So kind of similar to the system that we were looking at earlier on today, the strategy of the day. Here we're looking for stochastics to curve upwards and cross above the 20 as a bullish confirmation, and we had the support of the trend line here, and that was followed by a nice strong upward move. So that's another instance of how you can use trend lines and stochastics together to gauge a possible good entry place. Okay, so that's what's going on in the euro. Let's hop over and look at the pound here. I drew up the fib levels on the pound here because we can see, we're looking at the daily chart here, we can see the price is retraced all the way back up to the 50% level. So I found major resistance here at the 50% level. We're trading above both the 50 and the 200 period moving averages here. Trendline support to the downside here. But on the big picture, I wouldn't be surprised to see a bigger move off the resistance of this major 50% level here. When price goes from the swing high to the swing low and retraces to the 50, very often price can go down and take out the low. Moving on, let's take a look at gold. We had a similar situation in gold as we did with the euro. We had this retracement to the trend line and also confirmation from stochastics here, curving up below 20 and crossing above it, giving you a nice buy signal here. Price found resistance here, so now we have a double top here in gold. Price came down, broke through this the trend line support, came back above it, and it looks like it's going to find support at this trend line again. So kind of a sideways market in gold over the past couple of weeks here. We talked about dollar CAD last week, and we're looking at the weekly chart. Keep in mind that when you're looking at the longer time frame charts, the technical indicators carry more weight. So when you're looking at the 200 period simple moving average on the weekly chart, or a major trend line on the weekly chart, it carries a lot more weight. There was a positive Canadian GDP figure which helped drive the dollar against the Canadian dollar lower, and price found support right here. We have convergence of the upward sloping trend line and the 200 period moving average here, and we saw a really nice bounce off that. So since we're looking at the weekly chart, these moves are that much bigger. So this move from here to up here is more than 200 pips. So trading off the bounce of this 200 period moving average would have been a great trade in this instance. Good for a couple of hundred pips at least, maybe more. Next up, let's look at the pound against the yen, our volatile friend. It's a currency cross. A cross is a pair that doesn't include the US dollar. We've got an ascending triangle pattern here in the pound against the yen, and we can see that the pressure is building up here, and we can expect price to break out one way or another pretty soon. It's getting smaller and smaller, the zone that the price is confined into here. I drew the fib up on this chart too, and it was kind of interesting because, draw this out here, the resistance level at the top of the ascending triangle is exactly where the 38% retracement level is. So that makes this level of resistance even more significant. And even though we're trading above the 200 period simple moving average here, which kind of technically puts you in more bullish territory, if we look at the bigger picture, this is a big downtrend here, right? So we've had the big downtrend here. Price is retraced up to this important resistance level from the prior price highs here, and also from the 38% Fibonacci level here. So personally, I would be potentially favoring more of a breakout to the downside. If price can break through this upward sloping trend line here, I'd be looking for some pretty nice follow through to the downside in the pound against the yen, or the guppy as it's sometimes called. Next up, let's look at the pound against the Australian dollar on the 4-hour chart. We talked about this one last week. We've got a double bottom. We've got the neckline similar to the inverse head and shoulders pattern that we had looked at also. So we were looking for a potential breakout above the neckline here, and that did happen. Saw some pretty nice follow through to the upside here when price broke out above the neckline of this double bottom. Up here, it's since come back, retraced below the neckline, and now it's found resistance again at the neckline. Dollar yen, we're in a very kind of a sideways market here. We did have a death cross with the 50 period crossing the 200, and we did see something of a sell-off in the yen following that important moving average crossover on the daily chart. Look for potential follow through to the downside if price can get below this trend line here, the lower trend line of this channel. And finally, I wanted to pull up the New Zealand dollar against the US dollar. We had a nice uptrend here. We had something of a shooting star. It's not an ideal shooting star because you're really looking for the wick of the candle to be a bit longer. But still, it is certainly a bearish candle to have at the top of an uptrend. What happened? Price opened here, traded all the way up here, and then closed lower than it opened. So sometimes it's called a shooting star or a pin bar. The longer the wick is, the shorter the body, the better, but it is a bearish candlestick at the top of a nice uptrend here, and we got a nice price reversal on the heels of that pattern. So I drew the fibs up here. We can see where the potential support to the downside is going to be. I would look for potential support at the 38% retracement of the up move here, certainly at the 50% here, and then at the 61.8 we also have a confluence with the 61.8, and this is the 200 period simple moving average, so definitely a strong support level here. And if you look at the Australian dollar, it's actually a very similar chart. It had something of a shooting star at the top and then a sell-off after it. So that's it for today's presentation today, guys. I want to thank everyone very much for joining us. Again, if you have any questions, do feel free to shoot me an email at webinar@OctaFX. I look forward very much to seeing you all next week. And don't miss Yochai Elam's fundamental analysis webinar coming up this Thursday. Thanks again for joining us, guys, and look forward to chatting with you again soon. Good trading.